Good morning. Look, for about a month now, the market has been coasting on one big idea, that things were calming down, that we were heading for de-escalation. Well, overnight, that entire story was just completely blown to pieces. The whole situation has taken a radical turn, and believe me, the fear of war is officially back on the table. And here's the immediate damage. Right now, the Nifty is signaling a really painful gap-down opening of over 150 points. Whatever good feelings we had from Friday's close, they're completely irrelevant now. And this is the fuel for the fire, literally. Oil prices have absolutely exploded, jumping by about 8.5%. We've surged way past that huge psychological level of $100 a barrel. You've got Brent trading around 102, WTI at 105. This is a massive, massive shock to the system. So the big question that I know you're asking is, how on earth did things get so bad so fast? I mean, after weeks of relative calm and what looked like hopeful talks, what went so terribly wrong? Well, the answer is pretty simple, and it's not good. It all comes down to the total and complete failure of those high-level peace talks. Any hope for a nice, clean, diplomatic solution has just evaporated, and that has thrown global markets right into chaos. So, top-level people from the US and Iran met in Pakistan for this marathon 20-hour negotiation session. And what's so wild is that the early whispers were actually positive. The scuttlebutt was that a deal was close. Turns out, all that optimism was completely misplaced. The talks collapsed with zero agreement. And it all boiled down to two non-negotiable demands from the United States. First, they wanted a permanent ban on Iran ever pursuing nuclear weapons. Iran said no. Second, they wanted guaranteed free access for everyone to the Strait of Hormuz. And again, Iran refused. With no compromise on these two red lines, the whole deal was just dead on arrival. So, with diplomacy officially off the table, the situation escalated dramatically. We went from talks to a direct military threat coming right out of the White House. Last night, Donald Trump put out this fiery statement on Truth Social, and he did not mince words. He framed Iran's actions not as a simple blockade, but as, and I'm quoting here, world extortion. He's accusing Iran of charging illegal tolls for ships to pass safely, basically holding the entire global oil trade hostage. And listen, these weren't just words. Trump immediately announced an aggressive three-step naval action. So number one, the U.S. Navy is going to block ships. Two, they're going to search vessels they think paid these illegal tolls. And three, they're going to start the incredibly dangerous job of clearing out suspected Iranian sea mines. Make no mistake, this is a massive military escalation. And this right here, this is the most chilling part. The White House issued a brand new crystal-clear red line. If Iran attacks any U.S. ship, or even a commercial vessel, it will trigger a direct and immediate military response from the United States. The stakes could not possibly be any higher. Okay, so what does all this geopolitical drama mean for the markets, for us? Well, this shock has created a really dangerous divide. It's revealed just how differently investors are positioned, heading into today's open. The data here is, wow, it's stark. If you look at index futures, retail clients are 74% long, betting the market goes up. At the same time, the foreign institutional investors, the FIIs, are 78% short. Now, why is that? Well, retail was likely still riding last week's bullish wave, while the big institutions reacted instantly to the overnight shock. It's a classic standoff between retail and what they call the smart money. And with the Nifty set to drop over 150 points right at the bell, this setup creates an incredibly painful situation. You see what's happening, right? The vast majority of retail traders are on the complete wrong side of this move, and they're about to be trapped the second the market opens. All right, so let's get into the nitty-gritty. What are the key levels that are going to define today's trading? These are the numbers you absolutely need to have on your screen. Okay, for the Nifty, the most critical support we're all watching is 23,800. If that breaks, you could see another wave of selling. If we get any kind of bounce, expect a heavy wall of resistance between 24,300 and 24,350. For Bank Nifty, look for some support down in the 55,300 to 55,400 zone, with major resistance waiting up around 56,400 to 56,500. The options data really confirms this picture. The maximum call open interest, think of it as the big institutional ceiling, is planted firmly at 24,500. On the downside, the max put open interest, the floor, is at 24,000. So what does that tell us? It tells us the real fight, the real battle today, is going to be fought in that 24,000 to 23,800 range. And hey, as if all the geopolitics weren't enough, we've got a few other things on the radar. There are some earnings today, sure, but more importantly, India's CPI inflation data drops after the market closes. And then overnight, we've got a Fed speech and a U.S. Treasury auction, all of which could just add more fuel to this fire. All right, and a quick but really important reminder, everything we've talked about here is for educational purposes only. This is not financial advice, and we are not SEBI-registered advisors. Please be cautious out there today. Hey, if you want to get these pre-market explainers every single day to stay ahead of the curve, it's really simple. Just make sure you hit that subscribe button. So, that leaves us with the million-dollar question for today, doesn't it? As the entire world holds its breath watching the Middle East, all eyes in our market are on one single number, 23,800. Is it going to be a floor that holds? Maybe a base for a bounce? Or is it going to break and become a trapdoor to an even deeper fall? Trade safe, everyone.